Hello, everyone. Welcome to Wall Street for Main Street podcast. And today's special guest is a guy from Visual Capitalist. We have three people joining us on this podcast. One of them is the president, is Jeff Desjardins, the lead analyst, Rob Furhman, and the mining analyst, James Fraser. Guys, thank you for joining me.
Thanks for having us on, Mo. Pleasure to be here.
Well, I want to get this podcast started by talking about the gold and silver market, and this year has been a rough year. First time in a while that gold and silver is in the negatives. For gold, it's been double-digit return for the past almost decade, which make it one of the highest performing assets in the market right now. And if you look at the supply and demand fundamentals, I mean, it's stronger than it's ever been in the past. I just read an article today that the U.S. Mint had a record year in the sales of silver coins. I believe they sold over 40 million ounces of silver coins, which is a record. But yet the prices are still at around $20, and for gold, around I think at $12.74 right now. So why do you guys think there's a discrepancy with the price and the supply-demand fundamentals?
Yeah, well, I think you've got to keep in mind that there's sort of a short-term volatile section that we're going through right now, and then there's the long-term view. And the short-term, so what you've been talking about for the past year or so, there's definitely been some things that have definitely changed. There's been some headlines and technical selling that's sort of taken over for the last little while, and so that has had some pretty negative implications. At the same time, the long-term fundamentals, like you've said, haven't really changed, but with the federal banks, both in Europe and here in the U.S., continuing to print money and pump up the asset prices to create a wealth effect, it's definitely caused some constraint on the markets for sure, as the precious metals are sort of valued in U.S. dollars, and if you've got a currency that is appreciating, like what happened recently with the ECB dropping the rates, you end up with a short-term decrease in the price of gold.
And could you just introduce yourself to the audience?
Sure. This is Rob.
Rob, okay, Rob. So yeah, you made a good point there. The ECB cut the interest rate, and yet we saw gold and silver go down mainly because the dollar strengthened against the gold, and that caused a pullback there. And you talk about the central bank; they're also buying gold as well. If you look at Germany, they asked for their gold back. I don't think they gotten it from New York Federal Reserve, which was another bullish sign. And then also, if you look at the mining supply for gold and silver, it's shrunken this year mainly because a lot of mines had to go offline because it's not feasible to mine them because the price of gold and silver is so low.
Right, absolutely, I agree. And unfortunately, I think we're going to be stuck in sort of this period of instability for a little while until things get sorted out between the central banks and Germany getting their gold back, for example, and all these signs. We need a catalyst, really, at this point to really sort of move things substantially along in either direction economically.
And yeah, you made a great point there, and I think a lot of people, even the big investors like Eric Sprott, were caught off guard by what happened in the gold and silver market. Do you guys believe that maybe the gold and silver market went down because someone had been manipulating the market? I mean, if you think about it, all market is manipulated in one form or another. I mean, the stock market, you got the Federal Reserve manipulating the stock market by bailing out the banks and keeping interest rate at zero, which gives all the big banks free money at 0% interest. So do you think gold and silver is manipulated, or you guys don't believe so?
Well, I think you've got to keep in mind that, like you mentioned earlier, the precious metals have had a fantastic run for the last 10 years and have enjoyed some fantastic returns, and a correction over the short period isn't necessarily a bad thing, and it represents a buying opportunity. I think to be a precious metal investor, I think you have to really look at the long-term fundamentals and believe in them, and the fact that eventually things will go back to how they should in terms of dollar gold ratios and so on.
Yeah, you're right. I mean, technically, this is healthy to have a big pullback like this. I mean, gold and silver can't go up every year a lot. So to have this pullback, it also presents an opportunity for investors to accumulate gold and silver at a cheaper price than before. And the same for the precious metal stocks as well, because they're also at a bargain, which we'll get to in a few minutes.
Yeah, absolutely. And with respect to some of the producers coming offline, yeah, it's been a tough year. I think some of those companies, too, got a little overexcited and tried to get some projects going that maybe they shouldn't have in the short term. And it'll be interesting also to see what happens in Mexico with regards to silver supply with their new royalty tax that they're going to impose, it looks like, in 2014, which may have some somewhat serious implications moving down the road if it's a big hindering to exploration in Mexico.
Yeah, I did hear about that. They're going to increase royalty, which was only supposed to be a little increase, but end up being a bigger increase than projected. And mainly, I think, because Mexico lost a lot of revenue in other areas, tax revenue in other areas, and I think they're trying to make it up by bumping up the royalty tax on the precious metal because they see how high it is and it's how high it could potentially go, and I think they're just trying to cash in on that.
Yeah, no, absolutely. That's you've basically hit the nail on the head. Unfortunately, when they started looking at these policies and trying to push them through government, that was a couple of years ago, and that was when gold was at 1900 and you had silver that was rocketing closely behind it. And so now the mining companies are kind of a little stuck, and so it'll be interesting to see what happens over the next year or two in terms of the exploration.
Yeah, it'll be very interesting. So let's shift gear here and talk about the precious metal stocks. And James, I want to ask you, if you look at the overall financial health of a lot of these mining stocks, especially the exploration companies, a lot of them are in very, very poor financial health, and a lot of them don't even have enough working capital to take them into not even 6 months to a year. And there's experts out there like John Kaiser saying that about 600 exploration companies could get off the TX exchange. Well, he predicted that last summer. So I just wanted to ask you if you agree or disagree with that projection or prediction.
This is Jeff, and I'll mention something very quickly here just based on our data.
Sure.
I think I checked probably a week or two ago, and what I was looking at was about 35% of the companies that we cover through our system, 35% of those companies have less than 3 months of cash left. So
wow.
I think that overall, I mean, that doesn't mean that they're going away. It means that they might refinance or whatever. But it's interesting because when Kaiser made the prediction of about 600 companies or whatever the number you put forth, I think that overall companies have been a little bit more resilient than expected. But definitely the case is still true that about 35% of the data that we have suggests that those companies have less than 3 months of cash left.
And it tells you how hard it is to pick out good gold and silver stocks in the market because there's a lot of them out there, and a lot of them, most of them, are not in good financial health. And another thing that I find about investing in the precious metals industry is that there's a lot of bad management out there that just don't know what they're doing, or they take the wrong strategy, or they're just doing whatever it takes to keep their six-figure job and their their option and all the perks you get from being a CEO.
Hi, Mo. James here. You're exactly right. The exploration industry is going through tough times right now, and it's probably going to continue. The sector hasn't washed out completely yet. You mentioned John Kaiser. They're saying 600, 700 companies will go under. He's probably correct. A lot of these companies are having a hard time raising money right now, and they've got less than $200,000 in the bank. They're spending the remaining money, like you were saying, on salaries. You don't see many companies cutting back the management salaries, the rent, stuff like that. So it's slowly bleeding away. Accountants and lawyers, they're not actually putting any money into the ground right now. So you're going to see those guys won't be able to finance. Why would you buy one of those guys' exploration stocks when you could buy a producer at all-time lows or something like that?
Or someone that's actually putting money in the ground.
Yeah, like First Majestic Silver, which is one of the best silver companies out there.
Exactly. We did a thing on all-in cash costs for silver producers recently. First Majestic was actually near the top of the list, with the silver price currently being at about $21 an ounce. A lot of these silver producers aren't making money at all. So that goes to show you something's going to happen. Either these mines are going to have to shut down, or the silver price is going to have to increase.
So, what do you think happened when when silver and gold was at high above 30 for silver and gold was above 1,500? Do you think management were taking all this for granted and they're being a little too aggressive at the time and they just didn't see this coming?
Well, I think if you look at it from the perspective of from every person that's been involved with precious metals over the last 10 years, as you mentioned, the run just kept on going and going and going. And I guess people got a little bit greedy and just assumed that it was either going to continue or stay the same. And I'm guessing a lot of companies are using prices like that in their sort of base case scenarios. Is that a fair thing to say?
Yes. Yeah. So, a quick story here that a couple of years ago, we wrote a gold and silver report. And a lot of the companies that were in there, we thought would make investors a lot of money because their mining and their financial health looked good. And then when 2013 came around and the price of gold and silver went down, a lot of these stocks that we had on our list, I don't think we would recommend anyone to buy them anymore, which shows you how quickly things can fall apart for these miners.
Well, things move quickly in the mining industry. One of the big problems for a lot of the miners is the cost of production has gone up quite a bit. Your CapEx costs have gone up a lot. Using Barrick as an example there, the Pascua-Lama project, it was initially around $3 or $4 billion to build that. They're up at around the $7 billion range, and they're not even close to done that project yet. Oil's gone up. Oil's a big cost for producers. So overall in costs have just increased so much. They've increased greater than the gold price increase. And with the gold price going down right now and costs still high, it's big trouble for a lot of these guys.
Yeah, you made a good point there. The input costs are rising year over year in the double digits. And a lot of people were assuming, well, because gold and silver is a good inflation hedge, they'll be able to keep up with the rising inflation costs. But that hasn't been the case this year. So let's switch gears here and talk about what type of mining companies will be able to weather the storm better. So we have junior exploration companies, the mid-tier producers, and then you got the senior producers. Out of those categories, who do you think will be able to weather the storm better and actually provide a return and profit for investors that are investing in the precious metal stock?
Well, investors want to look for two main things on companies that will weather the storm. First of all, you want to look at a healthy balance sheet. So for any of the categories, exploration, development, or producers, you want to see a lot of cash on the balance sheet and low liabilities. For producers, you want to see low all-in cash costs. Development, you want to see a solid resource with a high grade, preferably, low capex and a high IRR. And for exploration, those guys are going through a tough time. Again, you want to see a lot of cash. And the other thing is you really want to see good management in all these companies. Companies that have high insider ownership, companies that have a proven track record. They've ran a company and maybe sold it before, maybe management buying in the open market. So basically you want to look at the balance sheet and you want to look at the management team, and those will be the two indicators for the selective companies that will survive this downturn.
Yeah, and I think having a good management team is probably the most important asset of the company. I mean, you can have a great mine and have a lot of cash and the balance sheet, but if you have management that have no experience putting a mine together and then making money from that mine, I mean, to me, that's a red flag.
I would agree with you there, 100%. Management's one of the top things we look for in our model for the Tickerscore system.
Yeah, especially when you see these companies that are going out and producing quarter after quarter, and they keep losing money every single quarter no matter what they're doing, right? They might have a great asset, but somehow they just keep on finding ways to lose money. That's not very fun.
No, it's not. And one of the things that they often like to do is dilute the shareholders, which is, also not very good for investors like us who's trying to, make a profit from investing in these precious metal stocks. Because that's a course that I've seen a lot of management take. Let's just dilute the shareholders so we can raise more capital and get this mine in production, which is a very bad strategy, I think.
Well, to raise money, you have to dilute the shareholder base and sell more shares, so they're kind of forced to do that. Only way.
Yeah, unless you stream it.
Yeah, the only way management can really get away from diluting the shares is if they sign a streaming agreement with a royalty company like a Franco-Nevada or a Sandstorm or something like that.
And yeah, that's a great point. I've seen a lot of miners starting to go to that course where they sign a stream or royalty agreement with those companies you just mentioned. So my next question is, should investors change their investment strategy for precious metal stocks after what happened in 2013? If so, what do you recommend?
James here again. I recommend that investors be very cautious in this market. You want to look for companies with good management and a healthy balance sheet. If you have companies where the management isn't so great, or any company that's running low on cash, sell the shares, take your tax loss. Tax loss season's coming up, and try and find the higher quality names. So investors should be very selective, looking for the higher quality names going into 2014.
And then you basically just talked about the royalty and streaming companies there. What are your opinion of those type of companies? Do you think those are the most safest or the most valuable type of company that investors should look for if they want to make money in a gold and silver stock?
Yes, I'm a big fan of gold royalty streaming companies for a couple of reasons. Number one, they've outperformed most other companies in the sector. And the other reason is because we were talking about CapEx costs earlier. These guys, it doesn't matter if the CapEx goes up. They're still getting gold at a certain price, say $400 an ounce or whatever the deal is. And they have upside on the exploration side as well if the mine finds more gold or that kind of thing. So I'm a big fan of these companies. You see Franco's grown pretty large over the years. Sandstorm might do the same. So yes, gold streaming companies are an attractive investment.
And they also act like a bank to the mining companies because a lot of them can't get a loan from the bank, and because a lot of the banks consider mining industry a high-risk investment. And so they go to the royalty and streaming industry, and in exchange for cash, they give them a X amount of gold or silver in exchange at a fixed price. And I think that business model is very attractive for any investor that want to invest in precious metal stock. I think they should look at the royalty and streaming companies first and have them as a core holding in your portfolio, and then look at the producing mining stocks after that. So before I let you guys go, I want to talk about your newsletter that you guys just rolled out. And it has a unique methodology on how you evaluate your mining companies. Can you talk about that a little bit, Jeff?
Sure. Starting on the beginning of this year, we started beta testing it, and then we eventually launched it as a public subscription service at the beginning of September. So basically what it is it's essentially a system that's empirical, quantitative, transparent, independent, all these things that are very rare in the sector. And we use that to basically create context and show show precious metal stocks head-to-head, essentially. So you're able to compare things much more directly. You're able to compare metrics, and we use this system to actually create what we call a ticker score for each company, which is a rating out of 100. So overall, there's about 20 variables for each type of company, and we've put together a scoring algorithm for exploration, development, and producing companies. And using that algorithm, we calculate the score for each company, and we allow investors to, within our system, to compare these stocks directly, sorted by jurisdiction.
Okay, so when you evaluate the companies, what factors do you look for, and before you determine the final score for each company?
Well, the key from our angle is we want to use the most objective measures possible. So that's numbers that we're pulling from their financial reports, from their technical reports. This is all public information, and sometimes we do some in-house calculations with it, but it's all derived from public information. It's not our opinion that a management team is good. It's not a subjective analysis like that. It's all objective, and it's all based on metrics. So, I mean, that's the key for us in terms of putting together this scoring method. But to get more specific, I mean, we can break down any type of category that we use and what variables are in there, or any type of for any type of company in the precious metal sector.
Okay, so when you look at exploration companies, what factors do you heavily weigh more on for those types of companies? You look at management or the finance, put more weight on that area compared to producing companies?
Hi, Mo. This is Rob again. Just to touch on the differences, of course, there's when you're in the exploration stage or the producing stage, there's going to be a different focus. So in the exploration stage, like James mentioned earlier, it's really tough to finance right now. And so the financial section of the score has the most weighting. Second is management. Third is project. And the fourth is their performance and valuation. And then if you would move towards the production side of things, obviously then you are more project focused, and you're looking at how efficient the mine is run and the quality of the management team that's behind it, and if they've got a team that's run a mine before and whatnot.
And that makes sense, because when you're looking at an exploration company and then you look at a producer company, you can't look at it at the same way, because you see a producing company and then they have less cash or more cash. You look at the exploration company and they have less cash and more cash. You sort of got to have a different analysis for each type of company.
Right, yeah, and that's the beauty of what we're doing, is we're comparing apples to apples, so to speak. It doesn't really make a lot of sense to compare a $10 million market cap exploration company against First Majestic Silver. There's not too many metrics that cross over that are similar. Yeah, and there are a couple, but not too many.
The ones that do cross over or have different importances for each of those. Like if you're looking at some metrics that might transition over, stuff like cash. I mean, it's going to be completely different. Cash is much more valuable to an explorer than it is to a company that's producing over 3 million ounces of silver. It depends. One other thing that's worth noting is that, as Rob just said, in terms of apples to apples, we also do it based on jurisdictions, and I think that this creates a lot of context for investors. A lot of people, when they're looking at the space, on the TSX Venture alone, there's about 1,600 junior miners. So how do you compare these companies against one another? There's so many different sizes of companies and types of companies, and so what we've done is we've broken it down by stage, as mentioned before, but we've also done it by jurisdiction. So when you're looking at Nevada explorers, you've already broken it down into companies that are explorers, so they don't have a resource. And you're also looking at companies in the same geopolitical jurisdiction. They have the same tax rates. They have the same, sometimes similar geology. So all these different factors are accounted for. Currency risk. And it just makes it a little bit easier to create some context between these companies. So you can look at, for example, if you're looking in British Columbia, I think there's 57 exploration companies. You can compare all these directly head to head, and you can get an idea of which ones are the best in that jurisdiction.
Okay, and I think this is very clever and very easy for investors who don't have the time to do all the homework on every little detail on a mining company. They can just use your service and determine out of all the mining stocks out there which one are the strongest and for which industry, the exploration, junior, and producer. So if you guys don't mind, are you able to give out one example of a company and how and what did you evaluate that company as?
Yeah, for sure. Well, we have a lot of companies that rate, and I mean, we look at companies generally in the top sort of 10% as companies that we think are rating particularly high. But is there a particular jurisdiction or anything that you're interested in?
Let's go to Mexico. Start with Mexico.
Start with Mexico, sure. Yeah, Rob has our little list right here, so you can go right into Mexico.
Yeah, so a good example of one of our top names in Mexico is Mag Silver Corp. They're in the development stage, and they have two major projects going on in Mexico right now. One is a joint venture with Fresnillo, which is one of the biggest silver producers in the world, and the other is a project that's 100% owned. And so, sort of to explain the scoring system a little bit, in the financial section, Mag's got a pretty substantial cash position, and so they have the ability to weather the storm for a while. They don't need to finance or dilute the shareholder base. With respect to management, they've got a solid management team that has a vested interest in the company. They own their own common shares, which shows belief in their project. Both the projects that they are working on right now are both high grade, which is really important because that really adds to your bottom line and adds to your internal rate of return and makes the project more efficient in the long run. And of course, then the valuation part comes in, and they're pretty well valued in terms of enterprise value per ounce across other Mexico developing companies. So you're getting a good deal per se when you're purchasing a company like Mag Silver.
Yeah, and to clarify as well, Mag Silver is a 79 out of 100 on our rating system, and 79 is in the top 5% of scores.
So what is the highest rating you have for a company? I imagine you don't have anyone with 100.
No, 100 is virtually impossible because there's so many variables that go into it, and they're all compared against each other. Our top score right now is an 85, and that's by a company in Colombia.
Oh, okay. All right. Well, other than this description service that you guys offer, which is great for people who don't have time to look at every company and then need some help, I would highly recommend people to check this out. And also, you guys have a different way of teaching and educating people about the silver and gold market using infographics. Jeff, if you could go into that for a little bit, if you don't mind.
Yeah, for sure. Yeah, one other thing that we do that's, the aspect, what we call Tickerscores, that's the sort of paid subscription aspect of the site. And then the part that you're referring to is the free side of our site, in which we focus on visuals to basically tell the story of different commodities and different concepts that are worth learning in the space. Basically, it's based on the premise that most people are visual learners, and I think that it's also fair to say that in the mining space and in the energy space, a lot of the time, the information that's presented to investors is not of the most interesting quality. It's not really done in a way that's very compelling, and so what we do is we put it together in a way that's a little bit easier to understand, a little bit easier to learn from. It's a little bit stickier in that you remember it. So that's what we're trying to do there.
Yeah, and I highly recommend people to check that out. It's a very easy and great way to learn the gold and silver space. And Jeff, if people want to find out more about your subscription base and also all the other services that you provided, where can they go?
Yeah, everything's at visualcapitalist.com. So that's VISUAL. Capitalist, CAPITALIST.com, and the subscription service is at that address, /plus, PLUS.
Okay, great. Well, Jeff, Rob, and James, thank you for your time. I appreciate it.
Yeah, thanks for having us on, Mo. We really appreciate it.
Thanks, Mo. Yeah, that was fun. We'll do it again.
Yeah, definitely. Thank you.